Welcome back to the Exchange. CNBC debuting a new housing market survey going beyond the headline numbers for an on-the-ground look into residential real estate, which is perfect, right? It's all local. You need on the ground. Diana Olick joins me here on set with the third quarter findings. This is going to get interesting as we have compares, right?
Exactly.
But what do we know now?
Okay, so looking at the third quarter, and first just want to explain what we're trying to do here, which is kind of get beyond these really cold national statistics on housing and find out what real estate agents from across the country and in a cross-section of neighborhoods are hearing from buyers and sellers. So here are the highlights from Q3. Now, when the average rate on the 30-year fixed mortgage was mostly on the decline, but it did move up a little bit mid-September. During that time, 49% of real estate agents we surveyed said it was a buyer's market, meaning buyers had the advantage because homes weren't selling and supply was sufficient. 30% saw it as balanced, and just around 21% saw sellers with the advantage. As for prices, 44% saw them on the decline, 35% stable, just 20% increasing. Again, all real estate is local, we know that, and market fundamentals are therefore different based on location. Still, the trend, definitely lower prices. But buyers are definitely getting more creative in how they're financing their purchases. We asked agents how, and their answers ranked the following. The most had clients using mortgage rate buydowns, and that could be from a home builder or an existing home seller. Next most popular was borrowing from family or friends. And finally, turning to adjustable rate loans. And in fact, this week in the mortgage applications data, we did see that share rise. Now, 89% of our agents reported having at least one seller who decided to cut their price last quarter. That really shows how kind of over-optimistic sellers still seem to be, despite all the uncertainty in the economy and this slowing market that we talk about all the time. Even more drastic, though, 40% of agents represented sellers who delisted their homes due to these rough market conditions. Now, this is just a few of the pieces of the survey. You can read all about it, of course, on CNBC.com.
Yeah, I want to dig more into that. I mean, we're talking always about forward-looking information. Crystal ball. What are agents thinking about for the next quarter, fourth quarter of this year?
Okay, so we asked them that question, and 49%, so almost half of them said they expect the market to actually improve slightly, and I'm sure that's based on these lower mortgage rates. 35% said it'll stay the same, and it was really just 17% who said that they thought home sales would start to decline and the market would actually get worse. So that's a good thing.
Good thing. The adjustable rate mortgage interest or interest from buyers is interesting to me as well. Thank you, Diana. This is going to be great stuff to have as we go forward and can get those compares.